And then this week, I was like, oh shoot, I have freaking 5 days left to pass this account. So I logged in, I traded supply and demand, and damn, this is looking pretty good, ain't it? As you can see, like I would have passed the account if I wasn't trading that bad strategy in the past, but it's fine. Yeah, that's great. Very easy, very simple strategy. Dang. Let's go ahead and oh well, shoot. Let me explain the trade. Let me explain the trade. All right, so 350. So stop loss goes 1 point above the zone, and the take profit is typically supposed to be 2 RR, but since I'm trying to pass the account, I just made it 11 points so I can make the $1,100. And this trade in particular, I was starting to trail it tighter because I didn't like all of the wicks on the 5 minute time frame. If you look on the 5 minute time frame, you can see that big wick right there, that big wick, that big wick, that wick, and whenever it was on the 1 minute time frame just now, I saw the consolidation and I was like, okay, that's a doji on the 5 minute time frame. And then you look on the 5 minute time frame, there's your doji right there. So being able to read price action is pretty good, pretty beneficial. Being able to kind of know what a pattern may look like on the higher time frame. Damn, this is yeah. See, this is way better than last month. I was cooked the last month, not come out. Well, I'm so glad that I started trading supply and demand. But yeah, yeah, being able to see what smaller candles or a lower time frame candle combination may look like on a higher time frame. That's really good. But let me just go ahead and explain this trade. So basically, whenever price is in a trend, either uptrend or downtrend, you want to look for patterns like this. So this right here is a doji before an impulse candle, and basically it's showing indecision before an impulse. And since time is fractal, this is a whole consolidation move before an impulse move on a lower time frame. So you're expecting price to come back to this point and then continue lower, because price is basically low, but because time is fractal, price is pretty much low on this time frame. But like realistically, like you're trading minor structure. Actually, you're trading minor structure, but it still works as long as you're trading like base hits like this, like 2RR. So what you want to do is you want to mark the doji, the indecision candle, and then see the impulse candle, right? And at this point, prices created a gap, and you're expecting price to fill the gap. So you're utilizing fair value gaps as well, and you don't wait for like whenever you see this right here, that's when you put your limit sell order there, and then the next candle forms, pulls back, and puts you in the trade. And what you do is you put your stop loss 1 point above the zone, and you put your take profit 2RR. And this works very well just because momentum is high. Momentum is high, time is fractal. So yeah, this works very well. It has a high win rate, and you want to use a low RR, which is 2RR most of the times, because you don't want to get induced, and you just want to get in quickly and get out quickly. And you can observe price action and see like, okay, this might not be a good trade. Say for instance, this trade, price didn't close low below the wick, and also there's a lot of bottom wicks there. So that's how you can observe and use price action to avoid potential losing setups, and really just make things increase your win rate and make things really simple, because you don't have to know like a lot of other concepts. It's just short supply in a downtrend, and long demand in an uptrend. And yeah, like I said earlier, I didn't like all of those wicks on the 5 minute time frame. But there wasn't really bottom wicks on the 1 minute time frame until here. And I think all of those bottom wicks was showing strength in the opposite direction, which is why we got that big push, that big correction. And you also got to know and realize that pullbacks are part of the market. Excuse me. Pullbacks are part of the market. You can see this is an impulse, and what you're doing is you're shorting in the impulse, and then on a higher time frame, let's say the 5 minute time frame, there will most likely be a supply zone on the 5 minute time frame for price to pull back and make the correction. And so this is the correction, that's the impulse, that's the next correction, this is the next impulse, and you can see price didn't close much below here. It started consolidating, it didn't close much below the low, and then it made another impulse in the opposite direction. And of course price is low because it has been coming down since 6 a.m. this morning. Damn, what the hell. But yeah, thank you Lydia for showing me supply and demand. She didn't show me how to trade supply and demand. She just showed me her strategy when I was trading my bad strategy, and at first I was reluctant. She didn't even tell me to trade supply and demand because our strategies are actually pretty similar. It's just like my strategy was missing some things. So it was switching to supply and demand was actually very easy. And then I watched JFX, James, I believe his name is, on YouTube. He's got 700,000 subscribers. He trades supply and demand, but he trades like the home run supply and demand. These are the base hit supply and demand. And I did backtest and learn the home run supply and demands, and I know how to trade them. I've traded them before. It's just sometimes they don't happen, sometimes they do happen. I know this week I don't think a single home run for the supply and demand trade happened. Honestly, it was just a bunch of base hits all week. But yeah, this is very great. We made it. Yeah, like I woke up this morning and I was like, oh, I'm gonna try to pass the account today and not wait till Friday, because like you never know what might happen the next day, so you never want to procrastinate with things. But yeah, this is pretty good. Yeah, less is more. Hey, 3 trades, cap, bro, cap. That's 1 trade. And that's 1 trade too. And then yesterday, I'm not gonna lie, I was kind of cooked yesterday because I freaking, like, I took a short overnight and I won. It was a base hit and I made 550. And then I woke up and I traded against the objective and I lost, I think, 200. And then I traded something that wasn't in my strategy again, but it was a like honest mistake, and I lost another 400. And then I just went short. I shorted supply and I made 1,500 because I sized up. And yeah, so 3.9k on the week, that's pretty dang good. So yeah, this has got me very, very excited to get into XFA and trade. Yeah, it's got me very excited to get into XFA. So let's take a screenshot of this 1 minute supply zone and downtrend, and let's be specific. 1 minute supply zone. Wait, no. 1 minute indecision. Decision candle before impulse candle and downtrend with fair value gap. Yeah, this strategy is so simple, so easy, like 11 points right there, 2.4 RR. But again, I'm not actually supposed to use that. I wasn't supposed to use 11 points. I just did that for the sake of passing the count. And here's the same situation. Like, whenever I got on the charts this morning, I put a drawing on the trades that I missed out on, and then took the exact same trade as the one I missed out on. So you can see pretty high win rate. Very easy, simple strategy, and of course you gotta use your discretion to. You gotta use your discretion. You gotta trade with the objective. I gotta make like a explanation on how to trade this strategy. Honestly, so yeah, we can go ahead and journal this now. Let's see. Yeah, bro, we journaling our trades. We journaling our trades, bro. And we got. I need to update my trading plan too, cause like I don't have the base hits. Well, I have one base hit right here. That's the same as what I just traded. That's on the 1 minute time frame. And see, this is me actually following my strategy, trading to RR, respecting the thing. But anyways, yeah. See, these are all the home runs. Gotta understand how to trade the home runs, and then I gotta add the base hit, screenshots of the base hits in there. So I'll do that today. All right. Alright, let's journal the trade that you just saw me take. So, short, 1 minute, supply zone, and downtrend. This trade was taken March the 19th. I gotta change this date to the 18th because that was the trade yesterday. This trade was a win, short supply and downtrend, always short supply and a downtrend. Market condition was in a downtrend. This was this was a 1 minute time frame. Impulse candle. Impulsive move is like for the home runs, really. This was substructure. There was a fair value gap. Wait, not come on. There wasn't a fair value gap. Well, actually, there was a fair value gap, but like not whenever I took it. Because basically see, I was supposed to be in the trade at around 8:50, but I came to the charts late, and so I just like set my limit order to where it would have put me in. So I wasn't even supposed to take this trade because it already happened, but it still worked. But whenever I'm in my XFA, I will not be doing this. This was not actually supposed to happen, just being completely honest. Because I was supposed to be in this exact trade. I was supposed to take it, but I was supposed to be in it over here. And I'm not supposed to trade mitigated zones. This zone was already mitigated. Oh, wait, hold on. There is a gap here though, so that's one thing that makes this trade good still. That's probably why I won, honestly. Yeah, because there's a big gap right there. Yeah, honestly, that's probably why I won. Alright, R to R, it was 4 to 11, just because I was trying to pass the account. Trailed, yes. P&L, it was like $1,100. And then, let's see. So, I was late to enter, but there was a fair value gap. Basically, the first, after. Actually, no, it's so simple, but I'm trying to complicate it, but this is actually all it is. Well, I'm just trying to be as detailed as possible. I was late to enter, but there was another fair value gap after the candle after. There were low wicks on the 5 minute, which made me think price was going to pull back soon, which it did. What else? What else? 5 minute time frame. Let's go on the 5 minute time frame. Price consolidated a little bit and then reversed. Okay, so the 5 minute sell candles got smaller, then formed a doji, then reversed, and price sharply. How do I describe this? Did it like sharply take out the low or something? What did it do? No, I didn't take out no low. I don't know what that was, to be honest. I guess it was just, yeah. Price sharply, TP, then reversed. What else? Price formed more 1 minute supply zones. Mid trade with decreasing momentum. Um, Price made lower lows and lower highs. Okay. And then great trade followed strategy. Very simple. Very simple. Okay. And now we must include a screenshot of the trade that I took. You want to have screenshots so you can see what works and what doesn't visually. So let's see. This is on the 1 minute time frame. And this should be on the 5 minute, right? Wait, no, that's not on the 5 minute. So I guess I never took the screenshot on the 5 minute. No, I didn't. Alright. Alright, let's take the screenshot on the 5 minute time frame. 2.4 RR. 11 points. And bro, like while I was in the trade, I looked on the 1 hour time frame and I was like, all right, what's price's objective? And I was like, okay, so we don't have an objective. I don't even know what's going on. I don't know what price is doing, but it is okay. So price is it's just been consolidating now. I guess that's what happens when there's no objective or something like that. All right. I haven't made a YouTube video in like 20 days because I've been learning this new strategy and I've been working and doing other stuff. But now I can get back to making videos. Okay, so let's go to Gmail. Like yeah, it's just so simple and easy. Like if you look on the 5 minute time frame, Like, this is the same thing that you just saw me trading, and I mean, this trade right here is how I made my my $1,500 yesterday in one trade, just one base hit trade. And also, like, if you take this trade right here and you say that your the current objective is to take out this low, then you can move your target to that low. And let's see, that was around 720. So yeah, you can move your target to that low, and that would have been like a 60-point trade with a ARR. So you'd be willing to lose 8 points to make 60 points, which is, yeah, that is very, very good. And you only had drawdown for like 2 minutes, and then from there it was just green, just down, pull back, down, pull back, down, pull back, down, pull back, down, take profit. And it's just market structure. And you can add size, you can add to your position throughout the trade too. Yeah, that's tough. This strategy is very great. I'm so grateful and thankful that I'm trading this strategy now. Alright, so image. What I'm now going to do before I call it is I'm going to include this working on the 15-minute time frame. If I can find it. This is when it was. See, look, this is me not locked in, but I still won the trade and made 1,400, and that was this Monday, I think. But this is me actually locked in, like reading the objective and stuff. And yeah, being prepared, you know. So yeah, this is the trade working on the 15-minute time frame, and the objective is to fill this higher time frame swing structure supply zone because we're bearish. And you see price filled the zone and reacted off of it, but it ended up breaking through the zone, which is fine because, like, obviously zones fail. That's where losses come in. But yeah, most of the times these hold up, probably around like half the time. And then on the 15-minute time frame, like, this is the base hit, that's the demand zone. This, you can see that's the indecision candle before the impulse candle. Pull back, continue higher. Indecision candle before impulse candle. Pull back, continue higher. Like, it's really robotic, really, I would say pretty mechanical. Yeah, and you can extend your TP to a higher time frame zone or a POI or the objective, whatever you want to call it. The only thing about extending your TP is you do have a higher risk of being induced. So, like, let's say, what do I use? Okay, so a doji before entry is a bad sign. Okay. Let's say for example, let's say I entered here, right? Which I actually did the drawing wrong here, which is why it looks weird. But let's say I entered here, right? The trade was successful. It did go to RR, but let's say I wanted to target the objective, which was to fill this supply zone, right? I would have gotten stopped out, but I wouldn't have been wrong. The trade would have, price still filled the demand zone. Supply zone, sorry. Price still filled the supply zone. I just got stopped out. So that's why if you're trading these base hits, you want momentum to be on your side if you are going to target the objective. Because see here, You can see price comes up, pulls back, price comes up, pulls back, price goes up. You can see that it's going like pretty steadily. Then it makes a correction. After it makes a correction, it fills this demand, right? Price shoots up. So this is whenever you can actually extend your take profit to major structure, because at this point, if price, like, let's say this is the last candle before impulse move that broke structure, you can see price broke this weak high right here. Like, if you're looking to go long here, like the probability of price coming back all the way here and then continuing higher is low. Why is the probability low? It's because of how strong buying momentum here is. So if you're looking to take a home run here, like, price is just gonna leave you, which is why you have to know the base hits and you have to know momentum. The base hits, I mean not base hits, the home runs are gonna work here whenever the corrections are almost as big as the impulses, but the strength of the correction isn't as big as the impulse. So take this for example. You can see this. Let me do this better. All right, take this for example. You can see this bearish impulse, like, that is huge, and then there's a bullish correction, right? And you can clearly see buyers are weaker than sellers. Then you see another bearish impulse, right? Price did not close much below that low, below that weak low. Then it corrected, right? Look at how long it's taking the buyers to come back to meet this supply zone before price shoots away. Okay? Look how quickly it's shooting away. So you got to be able to read momentum. Like, you can see at this point the buyers and sellers were equal strength, and at this point the buyers and sellers were not equal strength, and neither were they at this point. There's clear control from sellers. Whenever the buyers are trying to bring price up, the sellers are pretty much punching the buyers to the ground. And of course, if you're betting on a fighter, you want to bet on the fighter who's beating the other fighter up. So you want to just, if the sellers are winning, you want to be selling. If the buyers are winning, you want to be buying. Same here. You can see this is the indecision or last candle before the impulse, to the tiny gap right there that got filled. Bottom ticked the entry. And you can see this bullish impulse, it was like 5 1-minute candles to bring price this high, and it took the sellers, I don't even know how many candles this is, probably like 30, around 30, just to bring price not even that low. It just met demand and then shot up again. Same here. 2 candles, 2 buying candles from this demand zone to break that strong high, I mean that weak high. And there's also equal high liquidity is here, so that's a good trade. And then yeah, took the sellers a lot of time to bring price down, and then price shot up again. So yeah, this is whenever you're going to be trading the home runs, whenever price is moving like this. But, and let me show you the visual I made. Here we go. When price is moving like this, you are not going to catch a home run, because the home run has already happened. Price is shooting in the opposite direction, or price is shooting in a direction with a very high amount of momentum. This is when you're going to be trading this indecision candle before impulse. Shoot, this might be my my YouTube thumbnail. Actually, this is tough. I did this. All right.